By the way, if there's any point in time you have questions, just do feel free to type them in the box. And without further ado, let me invite Kim Ming to take the stage. Kim, are you ready?
Yes, sir. Yes, wait. Thank you very much.
All right, I'm just gonna share the screen with you and make you the organizer.
Thank you very much. Are you now seeing my screen? Yeah.
Yes, I am.
All right. Perfect. Perfect.
All right, over to you, Kim.
Okay. Thank you, sir. And welcome, ladies and gentlemen, to our webinar this evening. First of all, we, Trading Central, would like to thank Phillip Futures for bringing this opportunity to us to share our market view with our audience tonight, this evening. And yes, I'm Ming Lam, a technical analyst at Trading Central. And first of all, I would like to show off some awards of our company. We have just taken the analyst awards, one of the technical analysis awards in 2018 this year. And yes, I'm Ming Lam. You can call me Ming, and I have been with the Trading Central for around 8 years already. All right. So now, today I just give you the roadmap of today's webinar. I'm going to show you the recent actions of major central banks in the world, and I will pull up some charts showing our latest analysis on major stock market and also major currency pairs. All right. So it will not be a difficult webinar. It is just a simple briefing, just show you our recent analysis. So maybe you can, at the same time, enjoy your dinner, enjoy your evening glass of wine. At the same time, you listen to me. All right? Okay, let's start. Now, as we know, we have major central banks around the world making some action recently. The top one should be the U.S. Federal Reserve. All right. Now, what has the Fed done lately? We had already 2 interest rate rise so far in 2018 this year, and also we are expecting 4. That is 2 more for this year. And the Central Bank of the United States remains upbeat regarding the U.S. economic strength and its labor market. And at the same time, it hints that it will keep raising interest rate gradually. Now, this is the Fed fund rate. Federal Reserve fund rate. Okay, you can see that at present it is at 1.75 to 2%. All right, you can see that it is on coming up mode. It is coming up. And at the same time, let's look at the U.S. economic growth. It is a whopping 4.1%. Really not bad. All right. And at the same time, the job market in the U.S. remains very strong, and we have the non-farm payroll. I think one will come tomorrow, and at around 200,000 addition per month. And also at the same time, the U.S. jobless rate is at 3.9%, the lowest one since the year 2000. We have great GDP growth. We have the lowest jobless rate in almost 20 years. And look at the inflation. In fact, the CPI, the inflation has already exceeded the Fed's target so far. Now, this is the Fed policies makers' projection of interest rate recently. So The latest interest rate estimate was in June. Well, they expect that at the end of 2008, that is this year, interest rate in the US will be at 2.4%, and next year we will be seeing 3.1%. That is, they are expecting two more, as I said before, two more interest rate hikes this year, and in total 3 next year. Okay, 2 more this year and 3 more hikes next year. And maybe you will be watching very closely that the Fed will hold its next policy meeting this month, 25th to 26th, and it is expected they will rise interest rates in the coming meeting. All right. Now, this is the situation in the US. How about the other countries? Now, this is European Central Bank, ECB. In fact, we are seeing this interest rates are staying at the lowest level since 2014. And in fact, in 2015, they start buying bonds, assets. And well, they hint that they will only they will increase interest rate in the summer of next year, the soonest. All right, it is in sharp contrast with the situation in the US. And they say they will end the bond buying at the end of the year, but it is not yet confirmed. Well, maybe you will know that we have 28 members in the Eurozone, and they have greatly different economic situations, and the situation will be tricky when they come to meet to discuss rates, to confirm rate rise. All right. Now look at this. This is the ECB benchmark rates at present. All right, almost zero, negative. And it is the Eurozone economic growth, 2.2. Remember, we have 4.1 in the US. Inflation, well, just not exceeding the target of the ECB very much at the moment. Now, we are this table is showing the market expectations of when the ECB will increase interest rates. We can see that in the foreseeable future, that is this year and next year, expectations remain very low. Okay, investors are still not expecting the ECB to increase interest rates very soon. Okay, next we look at the situation in the UK. Well, we have the Bank of England increased interest rate for the second time in a decade. Now it is at 0.75%. Okay, remember in the US we have 1.75. All right. In the economic growth of the UK, 1.3. All right, still positive, but you can see it not very strong. Jobless rate 4.4%, and in fact, inflation is also breaching the BOE's target at the moment. Now, look at how market are expecting the interest rate rise of BOE. As we can see, markets, most of the investors are expecting the BOE to make another move in interest rate, that is upping interest rate only in the second quarter of 2019, next year. All right. Now in Japan, you can see, yes, you are correct. It is a zero. It is a negative number. Okay, negative 0.1%. Okay, if you put money in the bank, you have to pay money to the bank. All right. Inflation in Japan, well, not yet not yet reaching the BOJ, the central bank's target, still below 1%. Okay. And then you can expect that market expectation of the BOJ raising interest rates soon is very low. All right. This is in Asia. And now we are going to Australia. At present, the Reserve Bank of Australia, that is the Central Bank of Australia, their benchmark rate is at 1.75%, around the same level of the US. Well, they have the inflation in Australia has entered the target range of the central bank already. And that's why we are seeing that we have high expectation that RBA, the Central Bank of Australia, will increase interest rate. Well, maybe in the third quarter or fourth quarter next year. Okay. So after briefing you of all the major central banks' interest rate action lately, I would like to draw your attention back to this one, the US Federal Reserve rate. Okay, at present, it is at 1.75 to 2%, and they say they are going to raise this rate further gradually. Okay, so this we call a discrepancy in interest rates all around the world. We can see that the US is on a very clear, obvious path of increasing the interest rate. But on the other side of the world, the ECB, European Central Bank in England, in Japan and Australia, they are not yet confirmed their interest rate path at the moment. So, and this we can generate some trade idea or some expectation of how the stock markets worldwide will go in maybe in different directions. Well, on textbook, we are saying that higher interest rates are not good for stocks. Okay, on textbook only. But in real case, when the U.S. Federal Reserve increase the interest rate, at the same time, they say that they are very upbeat on the U.S. economy, showing that the U.S. labor market is still very strong. And so that's what you see. The Dow Jones Industrial Average, the U.S. market, all right? Now, mind you, we mark a peak at top, a record high of 26,616 back in January. And now we are not yet back to that record high. But as you can see, the telco, maybe I will add some telco indicators here. I will tell you that this red line is 20-day moving average, and this one 50-day, and this one is very important. We call it a 200-day moving average. And these all three moving average are nicely placed there. That is, the 20-day one is above the 50-day one, and the 50-day one is above the 200-day one. Okay. And also, I can show you here is a triangle pattern. People always say that this is like a coil. Okay, a coil. When a coil, when a stock or an index is trading in a coil, when it break out, we expect it to advance further. Okay, this is the Dow Jones Industrial. And how about the S&P? Now, this one is, maybe you are very familiar with this one, the S&P 500 of the US stocks. In fact, on the 29th of August, that is last week, it made another record high at 2,914. And you can see that it is also trading in a very nice bullish channel, or you can say a rising channel. Okay, and below this chart, we have a chart showing RSI. This is RSI, all right? shows the momentum of the stock. Above 50, we say it is in upward momentum. Now it is 60, okay, around 60. So you can see on textbook we say well, higher interest rates so would put pressure, a burden on company, on corporates. But now we can see that, well, the stock markets try to ignore this and still making record high. All right. And the next one, maybe you know it also better. It is the technology stock heavy Nasdaq Composite. We make a high, record high, remember, at 8,109 also last week. All right. And now it is also in a bullish channel. But have a look. It is not going up to the channel's upper boundary. It seems to be consolidated a bit at the moment. All right. But still, it is in the record high range, we can say. So now we can see that the US market is holding a very bullish party and asking other parts of the world to join it. But let's see which parts of the world, which other indices are joining this bullish party formed by the US. Now, this is a Euro Stocks 50, all right? Just like a Dow Jones in the US, all right? This is a major stock market index for the Eurozone. As we can see, situation is not very optimistic here. We have a declining trend line drawn from the start of the year, all right? Still, this index has not broken above this declining trend line. And in contrast to the situation we saw before in the last, and the Dow, in the S&P, and in the last step, you can see that the moving average are in reverse condition, in reverse order. Now, this 20-day moving average is below the 50-day one, and the 50-day one is below the 200-day one. Okay. Also, you can see that the relative strength index is in a very subdued area of 30. Okay. Particularly the last several days, we have a sharp drop in this index. Now we are seeing, the index is proceeding to its previous low of 3,262, and below that, 3,160 will be in sight. Okay, now this is the situation in Europe. Okay. Okay. Now, on the other hand, we are back in Asia, in Japan. We can see that the Nikkei 225 is trying to break the 23,050 level for several times, repeatedly. 1, 2, 3, 4. Okay, and at the same time, it is supported by a rising trend line, nicely. So we expect that once it break about this very key overhead resistance, 23,050, it should advance to 24,100, which was previously seen in January and February. Okay, but remind you, our key support is located at 21,850 here, and below that we will change our view to bearish. In the meantime, we are still bullish, just like the US index. Yes, just like the US index, we are bullish on Nikkei 225. All right. The next one, this one is quite obvious. In Australia, well, we just turned bearish on this index one day ago, when it broke below the lower boundary of a very nice bullish channel. This channel has been in place for 2 months. Once it breaks it, we turn our view to bearish. All right. And this is another aspect of technical analysis. We look at the pattern. If a bullish pattern like this one has been violated here, we turn bearish. At the same time, we can see that the relative strength index, RSI, is captured by declining trend line also. Okay, so the short term is quite pessimistic for this one. Okay, we are all along showing a one-day chart. Okay, and this one bar means 1 day's trading. All right, and we are expecting the ASX 200, the stock index for Australia, to return to 6,070, and in extension 5,960. Okay. All right. So this is the situation in Australia. We have just turned bearish. India, maybe you are also interested in this one. As you can see, we have a very strong bullish move along with the US index. But for the several days, boom, 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 consolidate. Okay, so all we can say is just be careful of this key support, the blue line, 11,340. Be careful of this key support. Once it breaks below the key support, we will turn also bearish. In the meantime, we keep a bullish view on this one and expect it to rebound to its previous high at 11,750. Okay. At the same time, you can see that the 50-day moving average is maintaining a short-term bullish view. But be careful, it has already broken below also the 20-day moving average. Okay, we can see it is consolidating. It is in a consolidation phase. All right. Now, maybe you are also very aware of the situation in China. All right. Yes, it is not good. And in China, this is Shanghai Composite. I will show you what is happening. From January, February is high, down to the low we just saw in August, early August. Okay, the index had fallen for over 26%, and it is officially in a bearish market. Okay, whenever we have seen the stock shedding over 20% from its peak, it is a bearish market. It is a bear market already. And look at this one. It has dropped over 20% from its high seen earlier in this year. And at the same time, we can draw a declining trend line, which it has not been able to break above since May. Okay. So for the Shanghai Composite, we are looking at the next target at 2,630, 2630. What is this? This is around the low of 2016. We have a major stock market downturn in China in 2016, and we expect that we are going to revisit this low in the coming period. Okay, below 2,630, below this 2016 low, we are going to see 2,485. I know that some of you may be interested in this one for trading purpose. All right, 850, same story. The declining trend line is also very marked. Okay, it is strong from February. Okay, it tried to break above, but where we see No chance at the moment. All right. Now, how about Hong Kong, the city I'm working in, I'm living in? No chance also. Because you see, many Chinese companies are also listed in Hong Kong, the H shares. And we are very close to mainland China. And what is happening in mainland China, particularly in the stock market, could be easily transferred to our market in Hong Kong. At the moment, you see that all the technical indicators are very badly directed. Okay, and no chance for the relative strength index, showing no upward momentum at the moment. All right. Yesterday we were down 2%, and today we are down around 1% further. And you see now we join this chart on different time on along this for the past 2 to 3 months. We keep lowering the key resistance, the blue line. We keep lowering it. Okay, at the moment the key resistance is at 28,500. Okay, below this level, below this key resistance, we are seeing a target at 26,000 and then 25,175. Okay, as long as this index is below this key resistance, it is going to proceed to the downside. All right. Okay, so Singapore, same story. Singapore, to us, it is a little bit more volatile than the HSI, Hang Seng Index of Hong Kong. Once before we have a moderate rebound in June, July, and August. But now it has come back to the downside. All right, you can see the technical indicator. Well, mind you, this line is a long-term bullish trend line drawn from 2016. Okay, now the STI has broken below this long-term rising trend line, and we are expecting that the index will keep proceeding downward. Okay, next level, next support will be at 3,080 and then 3,000. As you can also see, RSI also in a very bearish mode. Okay. Same, maybe you are interested in this one. We are seeing a similar pattern in MSCI Singapore. We are targeting on the downside 1,645 and then 1,600. Key resistance is at 1,730. The short term is still very bearish. Okay. This is Malaysia, Kuala Lumpur index. Okay, so we maintain a quite bullish view at the moment, as long as the key support at this level 1,773 is maintained. Okay, we expect it to revisit 1,827. Okay, it's previous high since maybe a week ago here. Okay, it is as you can see, the technical are not very strong for this index. Okay, the 20-day moving average is barely above the 200-day moving average. Okay, and the 50-day moving average is below the 201. Not a very convincing bullish pattern we can see. All right, so let's have a little summary of what I have shown so far regarding the worldwide stock index. US stocks are still very strong, and recently they have made new hikes. Okay, just last week, I remember. And most other markets are consolidating. All right, they are lacking, as you can see, they are lacking upward momentum at the moment. Of course, they join, some of them, just like Australia market, the Indians market, they joined the US party sometime before, but recently, for the past 2 to 3 sessions, they are entering a consolidation phase. And needless to say, in China and in Hong Kong, the markets are still very subdued. All right, and we are in a bear market, no doubt. When are we going to see a bull market in China and Hong Kong? I don't know. We have to wait and let the charts to confirm to us. And also now, I want to point out one or two things regarding our market situation. We are, well, of course, we are technical analysts, but at the same time, we are not blind to what are happening around the world. We have now emerging market crisis around, and investors, as you, have to be aware of the contagion of those crises. Okay, and at the same time, we have to anticipate. We have midterm elections in the US in November. Okay, this I will repeat when I talk about the currency. Okay, funny thing will happen from now on to November. Politics, you see, and the political events will surely affect stock markets. So you will be very busy. You have to look out at the emerging market crisis. You have to look out of the US midterm elections, right? Well, making money is not so easy all the time. And okay, now this is why I want to talk about the worldwide stock markets after the major central bank's action. Now, I'm going to talk about the currencies, the Forex market. Now, this is our view of the US dollar index. Mind you, we are also using one-day chart here. There is one bar, is one day trading. Okay, as you can see, we are in a consolidation mode for the US dollar. At the moment, we are seeing a key resistance at 96 for the US dollar index. Okay, so in fact, what happened? Since February to August, we have seen a 10% rise in US dollar index. The US dollar have been very strong this period. Okay, we have, as I pointed out before, the US Federal Reserve is giving a very clear signal that it is on a gradual path to raise interest rates gradually, and this one is a trump card when the US dollar is trading against other currency. Okay, but recently, well, you see, it is, well, nothing will go straight up and straight down. And now it is time for the US dollar to take a breath, take a breath. And it is we can see it is in a consolidation phase. As long as it is under 96, the US dollar index, USD index, we expect it to return to the region of 93 or 94 or 93. However, if it is above 96, 97 will be in sight again. Well, talking about US dollar, I want to give you a wider perspective of the US dollar index. All right. Now, this is the US dollar index in a monthly chart. That is one bar. One bar is 1 month trading. We are looking back at over 30 years of US dollar index. All right. Well, the highest one, 160. We saw a high in US dollar index 160, the record high back in 1985. And the lowest one, yes, the 171 was seen the lowest level of the USD index. It occurred just before the 2008 financial crisis. Okay, I'll give you some levels for reference. Well, we see when talking about US dollar index, we always mention a psychological level, the 100 level. We saw this maybe in 2017, just after Mr. Donald Trump was elected as president. And now it is struggling below the 100 level. And we, in fact, we expected to violate this 100 mark later. Okay, of course now the US dollar is in consolidation phase, but eventually we expect it to breach the 100 level again, provided that the US Fed keeps increasing interest rates while other central banks are, well, doing nothing at the moment. All right. Okay, I showed you another currency. Euro, just like the US dollar index. Well, in fact, the euro is the major constituency of the US dollar index. It has a rating of over 50%. Okay, so it could be a mirror size for the US dollar index. That's why we can see that from the year high to year low seen in August, we see the lowest point of euro is 1.13 US dollar. Okay, for the whole year, from high to low, it has fallen for around 10% drop. So nothing will be straight down and straight up. Now it is also taking a rest, and it has rebounded, as you can see. Okay, but we have set a quite tight key support for euro. It is at 1.1520 US dollar. Above this one, we expect it to challenge 1.175 and 1.185 on the upside. If not, if it pulls back to this one key support level at 1.1520, we expect it to revisit 1.13 very soon. Okay, at the moment we are bullish on this pair. Okay, on a short-term basis. And Japanese yen, you can see that for the past month or so, it has broken below a rising trend line. Okay, and now we set a key resistance level here, 112 and 15. Okay, only above this level we are seeing it to resume its bullish trend. However, whenever this key level is holding firmly on the upside here, we expect it maybe it will test the support at 109.80, 108.10 on the downside. So this is dollar yen. So how about the pound, British pound? You can see that it is a very good material for explaining technical analysis. We have a double top here, and since April and May, yeah, we have seen a very sharp decline, and now we can draw a nice declining trend line since late April. Pound has not yet broken above this declining trend line seen. Okay, we have set a key resistance at 1.31. Okay, below that we are going to see a revisit of the previous low at 1.2655 and 1.2415. Okay, very bearish indeed, very bearish for the British pound. As a side note, British pound has been affected by another political issue back in the UK and in the European Union. Yes, it is the Brexit issue, hard Brexit, no deal Brexit. All news come around every day, and well, it seems that the pound got no chance to get upward momentum at the moment. Okay, and Australian dollar. Yes, for the whole year, this 2018, this pair Aussie has been trading in a very bearish channel. Okay, now currently we are seeing a very strong support. In fact, it is our first target, downside target, at 0.7160 US dollar. Okay, as long as this pattern, this bearish channel pattern is not broken, okay, as long as this key resistance at 0.7365 still holds, okay, we are bearish on the Aussie, and once breaking below 7160, 7010 will come into sight. Okay, it is a very good technical analysis material. You can see, and also we can see that RSI no upward momentum, and we can't expect. It indicates that we cannot expect imminent rebound in the near future. Okay. Now, how about its labor? New Zealand dollar. Very bad also, very bad. And you see the badly oriented technical moving average. Okay. Now also we have bearish channel. On the downside, we are looking at 0.6510 and then 0.6350. Okay, only a break about 0.6750. We could only then we would change our view to bullish again. Okay, so it also has something to do, in fact, for Australian dollar, for New Zealand dollar, and also for the Canadian dollar, as you will see later. It is also correlated to those commodity price. Okay, sometimes we call this commodity linked currency, the Aussie, the New Zealand dollar, and also the Canadian dollar. All right, now go to the next one. Swiss franc. Swiss franc, we are seeing that Swiss franc is very strong. That is, the US dollar against the Swiss franc is very weak lately. Okay, it has broken below even the 200 days moving average. Look at here, look at here, and well, it will spend some time struggling on the downside. Okay, downside target 95.70. Okay, only a break above 98.80 will we see a bullish trend, a bullish reversal. Okay, bullish reversal. Now we are in a bearish mode for this currency pair. And on the other hand, you can see that we like some other currency, we have just changed our view on US dollar against Canadian dollar. We are turning this pair bullish. That is, the Canadian dollar has been weakening these days. Okay, now it is another good example for technical analysis. The pair has broke above a bearish channel that has been lasting for, well, over 2 months. Now it breaks about. When it breaks, we turn our view to bullish. Okay, and as you can see, the RSI is also showing upward momentum for the pair. Okay, so on the upside, we are seeing 1.3290, 1.3385, and mind you, our key support is located at 1.2950. Okay, below this one, we will turn bearish again. Okay, for Canadian dollar, as a side note also, apart from the strength, recent strength of the US dollar, there is another factor affecting the Canadian dollar. Yes, that is the trade talk. The trade talk between the US and Canada. Okay, they have not yet fixed anything, as far as we know. Okay, so now, ladies and gentlemen, Chinese yuan. We have seen a very bearish Chinese stock market. Then how about its currency? This is the US dollar against the Chinese yuan. Okay, so see here we have a round shape. When we describe a bottom, it is better to be a round shape. Okay, a round shape bottom means it has made a bottom. Okay, now here we are forming another bullish pattern, a triangle pattern. As I said before, like a coil. Okay, if you finish the coil by emerging to the upside, we keep a very bullish outlook for this currency. Okay, well, mind you, this pair US dollar against the Chinese yuan has been strengthened up for 8% since mid-July. Mid-June. You know what happened? Yeah, when Mr. Donald Trump initiated a trade issue with China, and since then the two countries have been exchanging some tactics. And now we're seeing that Chinese yuan is weakening against the US dollar. Okay, and we are looking at in fact we expect it to reach 7 against the US dollar. Okay. Now, Singapore dollar. Okay, we are still bullish on US dollar against the Singaporean dollar. Okay, you see that in recent days it has tested support at 1.36, and now it is rebounding and revisiting 1.3820, and we expect it to also touch 1.3925. Well, maybe you see we have put some number here: 61.8%, 38.2%. These sometimes we use as secret numbers for technical analysis. We call this a Fibonacci number. Okay, it seems to be they say a perfect ratio for some pairs, for some assets, and we have tested for sometimes it is quite accurate. Okay, when placing target, we sometimes use also this Fibonacci best ratio number. Okay, and it is going to the end of my webinar at the moment, and I will, as my experience tells me that most of the time our audience will also like to have a look at the precious metals. So today I have also put out two charts on precious metals, on gold and on silver. Okay, and although recently we have seen that the US dollar is in consolidation phase. Okay, well, we can see that gold has rebounded quite a bit, but we see that the rebound, the strength of the rebound is not very strong at the moment. Okay, the technical indicators are still very negative at the moment. Okay, now we set a key resistance at 1,212 per ounce for gold. Okay, below this key resistance, we are looking at 1,182 and also its previous low at 1,160. Okay. Now, the last one we are looking at is silver. Silver, I can say it is way more volatile in trading than gold. And but at the same time we can see a trend, some trends in this metal. You see, for most part of the year, we have seen a declining channel. Okay, silver is trading in this declining channel, and well, in July it just broke below the lower boundary of this channel, and extend its decline. Okay, we can see also, we can draw a nice declining trend line here. Okay, key resistance for silver is 14.95 per ounce, and we expect it to go to the $13 an ounce region. Okay, first target will be at 13.55. Okay, so let me do a little summary for the second part of our Forex outlook. Okay, now US dollar is in short-term consolidation phase. Remember, it has climbed about 10% this year as the Federal Reserve increased interest rates, and we say it is in a short-term consolidation phase at the moment, just at the moment. Okay, well, we can see euro and yen are trading quite choppy at this stage. Okay, and there is a saying that yen is a safe haven asset. Whenever there is a political tension, when there is some uncertainty, people will buy yen so that the dollar yen will drop somehow. But I cannot see that yen is really a safe haven asset at the moment. And as you see, the US dollar gather strength. The pair US dollar against Japanese yen will also rise along with the US dollar. Just beware. Okay, so now as we can see, British pound is in a very ugly configuration. It's in a downtrend, and of course, when you turn on the TV, turn on the financial page, you will see big news everywhere. And still, it is still a factor affecting the British pound. And Australia, you can see for the whole year, it is in a bearish channel. Silver, gold remain very subdued. Okay. Now, I have to reiterate a point that the US dollar is also affected by political events. Okay, the coming midterm election in November in the US, you have to put a focus on, and also capital flow. Okay, currency, as you can see, currency markets is also affected greatly by the movement of capital. When some parts in the world is better, capital move to there. Okay, as we can see, the US is in a is having a very strong economy, and well, I'm not surprised if capital go over there. Okay, so that's what I want to share with you, ladies and gentlemen, this evening. Any question?
All right, if you have any questions for Ming Lam, please type them in the question box and he will address them very shortly. Meanwhile, if let's just give our friends 3 minutes or so to follow up the question, shall we, Ming Lam?
Yes.
All right, so for Melvin, your inquiry is if we are going to get a copy of all the slides. We are recording this session, so you should be able to catch this webinar on our YouTube channel. We should be sending you an email with the link to watch the video to revise what we have covered. All right, so
wonderful.
Yeah, so that's Melvin's query. Next up, we have a question from Peter Tang.
Yes.
Ming Lam, would you like to have a look at the question box? The question is basically he's asking if you have a FX trading strategy, something simple that he could look at.
The box. Let me check. It is in the question box.
Yes.
Sorry, sweet. I cannot. I cannot
Sure.
see.
Peter Tang's query is he's inquiring if you have a FX trading strategy that you would like to share.
FX trading strategy. Yeah, good. First of all, we look at the US dollar index. It is the major of the major. We figure out the US dollar index, the US dollar strength, and then we expect, we draw our view on other currency. And also at the same time we look at the euro. Okay, and as you can see, we are technical analysts. We find technical patterns. As maybe I can show you. Technical pattern. We try to figure out technical patterns. First of all, technical patterns on those assets, and then we decide. First of all, US dollar, and then technical pattern. And as you can see, technical indicators that, okay, whenever we are, for example, I will give you another hint. Whenever we are bullish on an asset, its first requirement should be it is about, first of all, about its 200-day moving average. Okay, if it is below the 200-day moving average, we will never be bullish at the moment. Okay, sometimes we wait and we just have a look. Okay, so remember, for looking at daily chart, the 200-day moving average is a key part for you to look at. I hope this helped.
All right, thank you, Ming Lam. All right, next question is from Chen Bang. His question is, would the negative carry on for euro dollar and pound dollar have an impact on the fund flows of these pairs? Would the negative carry on for euro dollar and pound dollar have an impact on the fund flows of these FX pairs?
Yes. We are seeing that as I mentioned, we have to also look at the capital flow. We are seeing quite a little bit trouble in the Eurozone, and also in the maybe we will have another webinar to talk about the political issue. And the Eurozone is having a little bit problem, and the pullback of the euro, if it pull back to the key support, we will see a deeper and more strong downslide for the euro. Okay, and of course it will impact other pairs also. If you are doing also euro pound trade, you're usually doing also euro yen trade, and you have to take good care of that. You have to be aware of that also. And yeah, you are right. Euro, as I mentioned before, it takes around 56% of the US dollar index. So it is a mirror. It is a mirror of the US dollar at the moment. Now let's see in this situation, if you are going to invest, you have money to invest. Would you invest in the Eurozone or in the US when the economy is booming? Well, you have the answer already. Yes.
All right, Ming Lam, I'm not sure if you have a chart for this. What about, if I got this correct, is the US dollar and the Malaysian ringgit?
I'm sorry. Today I don't have this one. I have the US dollar against the Singapore dollar at the moment.
All right, thank you, Ming Lam. All right, we have time for just one more question? Is there any other question? from the audience? All right, looks like that's all the questions that we have. If you have any other questions later tonight or tomorrow and you'd like to fire them our way, let me just type in the email address that you can type your questions to. All right, so the email address that you can send your questions to is on the chat box. Thank you for being a wonderful audience. Thank you, Ming Lam, for
Thank
giving
you,
us
sir.
valuable insights.
Thank you, ladies and gentlemen.
All right, have a good night, everybody. Thank you for joining us. Thank you, Steve. He said it's interesting and very clear. So well done, Ming Lam.
Thank you. Bye-bye.
All right, bye-bye. Good night, everyone.
Good night, everyone.